You lost $20 billion in 2 days. Not in a casino. Not in crypto. You did it in the middle of Wall Street. And when you went down, the banks that opened the door started bleeding too. That was the secret nobody wanted to say out loud. You were not just a client. You were a bomb sitting on 6 balance sheets at once. Level 1, the quiet genius. Before the collapse, you did not look dangerous. You looked ordinary. A small man in a plain suit. A calm voice. But inside the market, you were different. You could read balance sheets. You could read fear. You could sit in a room full of louder men and notice the one number everyone else ignored. That was how you climbed. From a desk job. To a trading seat. To rooms where people stopped explaining things slowly. At first, the system loved you. You made money. You looked disciplined. You looked like proof that Wall Street could still discover talent. Then the regulators came. Level 2, the closed door. The punishment did not look like a prison. It looked like silence. You were told you could no longer manage outside money. For most people, that would have been the end. No clients. No empire. But you heard the rule differently. If you could not trade other people's money, you would trade your own. So you built a family office. A private room. A room with fewer questions. You started with a few $100 million. Then the numbers began to grow. 200 million became billions. When the money got large enough, Wall Street leaned forward again. The banks came back. They did not come because they forgave you. They came because they could smell fees. Level 3, the invisible machine. The trick was called a total return swap. It sounded boring. That was the best part. On paper, the bank owned the stock. You did not have to appear as the buyer. You did not have to tell the market how large you were becoming. You did not even have to pay the full price. You posted a slice of cash. The bank bought the shares. If the stock went up, you got the gain. If the stock went down, you owed the loss. The bank collected fees and told itself the risk was controlled. To you, it was simple. 5 times leverage. $1 of your money could move like 5. 20 billion could cast a shadow close to 100. Each bank saw one piece. Nobody saw the whole creature. Level 4, 6 doors. You did not go to one bank. You went to 6. Each one believed it had a smart client, a manageable position, and a profitable relationship. Each one thought it was being careful. But they were not somewhere else. They were buying the same names. Media stocks. Streaming stocks. Chinese tech stocks. Companies whose charts rose so quickly that the rise became its own advertisement. The more the banks bought for you, the more the prices climbed. The more the prices climbed, the safer the trade looked. The safer it looked, the more money they were willing to lend. This is how a cage builds itself. With confidence. Level 5, the first crack. Then one of your favorite companies announced it would sell new shares. $3 billion of new supply. The market did not like it. The stock fell. 10%. The banks called. They wanted you to reduce the position. You heard fear in their voices and mistook it for weakness. You sent more collateral. You told them the trade was fine. Then the stock fell again. This time, 20%. Now the math stopped being elegant. The same leverage that made you look brilliant began to eat through the floor. The banks called again. But now the question changed. What does everyone else hold? And that was when the room changed. Level 6, the circle. For the first time, the banks understood the shape of the trap. 6 desks. 6 versions of the same promise. And behind all of them, you. If they all sold slowly, the damage might be survivable. If one sold first, that bank might escape. If one waited too long, that bank might be buried. So they gathered on calls. They spoke calmly. They talked about an orderly exit. But markets do not reward politeness during a fire. The next morning, the fastest bank started selling. Then another. Then the others realized what was happening. The agreement died before lunch. Blocks of stock hit the market like concrete. Prices fell through floors. Investors saw the collapse and panicked without knowing the cause. The banks were no longer managing your risk. They were fighting each other for the exit. Level 7, 0. In 2 days, your empire disappeared. $20 billion of personal wealth. Gone. A position near $100 billion. Unwound by force. Banks lost billions. Reputations cracked. And you became a lesson people whispered in risk meetings. Not because you were the only greedy person in the room. Because you proved something worse. Everyone was greedy. You wanted the upside. The banks wanted the fees. And each side believed someone else was carrying the danger. That was the real leverage. Not the swap. Trust. Stretched beyond recognition. By the time they understood that, there was nothing left to save. Only a crater. And a man in a plain suit, still looking almost calm. You did not lose $20 billion because the market was mysterious. You lost it because the machine worked exactly as designed. It gave everyone what they wanted. Until the bill arrived.